there are a lot of people out there that talk about like subject to and some of these different investment strategies. I mean, everybody has a strategy these days.
I'm curious, what's been the biggest frustration maybe for you and our clients, friends, or family, or investors when it comes to the 1031 exchange? Like, what comes to mind? What's some of the frustrations that kind of come to mind on that?
I mean, I haven't had with the bird strategy. I haven't had too much trouble because of the bonus depreciation rules that are out there. So, with the heavy bird strategy deals, I've actually been able to take advantage of this bonus depreciation and get massive write offs with this strategy. So, um, once you do your cost segregation analysis and you start breaking down this property between 30 year or well 27 and a half year, 15 year, 10 year, and some 5 year itemization, you can get a lot of those deductions accelerated into year one or years 1 through 5. And when you're doing that and going out and doing, let's call it even 10 to 20 deals a year, you're probably going to generate enough tax losses that you could write off your spouses. If your spouse is like a W-2, you could write off like 100% of that, especially if you're a real estate professional. So I haven't had too much trouble with the 1031 because I usually don't sell. I usually buy and hold and do like a self flip through the burst strategy. So I haven't experienced a ton of frustration there, but I've been pleasantly surprised by the real bang for your buck on bonus depreciation and the burst strategy and just buying and holding. And I feel like people don't talk about that enough. There are a lot of people out there that talk about like subject to and some of these different investment strategies. I mean, everybody has a strategy these days, and I am pretty strategy agnostic in that sense. I teach all these strategies, even subject to lease purchase options, land contracts, all of it. But the burst strategy, when it comes to taxes, is one of the most efficient ways to invest, and just keep cash flow coming in, keep your ghost depreciation, your 27 and a half year straight line stuff as well. So it's just been phenomenal from a tax standpoint.
Absolutely love it. Yeah, cost seg, and if you never sell, right? Guess what? The capital gains tax doesn't come due, and so you can get bonus depreciation. By the way, 2022 to last year for 100%. Next year it goes down to 80%. And it starts to kind of phase out over the years, but hopefully they renew some of that and get it going. And real estate professional, for those that are wondering, basically you're spending over 750 hours basically managing or operating or like active in your own personal real estate deals. That's how you can you can qualify. Talk to your CPA, make sure on that. It doesn't mean you have to get like a real estate license for those that are wondering. It just means that you're seen as per the IRS's rules on that. So look that up as far as a real estate professional. And then, and then again, cost seg. Cost segs are an amazing way to accelerate what normally is like 27 and a half years for residential or 39 years for commercial properties into smaller chunks of years so you can get the tax write-off now and then use the time value of money. So those are all things. By the way, but if you are struggling with the 1031 exchange and you're wondering if there's another way to do this, you can actually save a failed 1031 exchange. You can sell cryptocurrency, businesses, real estate using something called a Deferred Sales Trust. We're experts in this, and we want you to know about this so you never feel trapped to not sell. Because at some point, Brian's going to want to play some more basketball. He's going to want to travel some more. He's going to YouTube superstar, right? And he's going to be like, man, I got another call. At some point, he might exit these hundreds of properties and have this huge tax and then this huge depreciation recapture that's going to catch up with him. But then he's going to go, you know what? There's a solution that's beyond the 1031, and I have to sell individual properties all at once. And it's called a Deferred Sales Trust. I remember Brett telling me on that podcast. And so you want to know about this so that when you do go to exit, you have a plan. Because here's why. 25% to 50% of your gain is going to be wiped out by capital gains tax and depreciation recapture. So with the Deferred Sales Trust, you can defer all that. Here's the next best part. You can diversify the wealth into stocks, bonds, mutual funds, real estate, hard money lending, ground up development. You can also do it at optimal timing whenever you want. There's no timing restrictions until you can sell high and buy low.